Mickey Fulp.
We're on camera.
We're on camera. And we're going to do a loop in Stanley Park.
We are?
And we're not far from there, about 5 minutes. You're going to hear him give me directions on how to get there because I don't know where I'm going.
Okay.
So I was checking out your some up-to-date stuff from you, kind of like an up-to-date bio and where you're at right now. And I thought, well, Mickey's kind of pulling away a little bit.
I am.
Yeah, he's pulling away a little bit, you know, and you're one of those guys, thank God, that you're honest and upfront about how you feel. You don't hold your feelings in. Don't really care what everybody thinks about you because of it. And, you know, that's just a blessing in my opinion. So
I appreciate the compliment. So
absolutely. Well earned, my friend. And so I'm just going to go right here.
Right on pin.
I'm going to keep this just open. We don't have you know, we haven't sat down and wrote out a bunch of talking points or anything like that. It's kind of where's your head at right now? If you have a message for, you know, younger generations, because you have certain views on investing in today's market, give her.
Well, number one is speculating.
Speculating, well said.
Few investments in the market, even the big stock markets. So it's all speculations. Mm-hmm. It's even more speculative now because of what the Fed's doing, what U.S. Congress is doing, what Biden's doing. It's all, the economy's in a mess. We've printed too much money. We've got too much debt. We have raging inflation. Mm-hmm. And it's a real quandary. How do we get out of all this? So a lot of it depends on Pablum Powell, Jay Powell. I call him Pablum Powell. But we're under his thumb right now. And you saw it, we see it in the markets this week. Markets are up all week. There's been some better economic news coming out of the U.S. That all reflects on what's going on in the market. Price of gold's up. That's good.
Yeah, I think the last time I saw you here, price of gold was like around 1,400.
It probably was.
Somewhere around there. Actually.
Yeah. Last time we did this would have been January 2020, right before the pandemic.
Yeah, right before. So, yeah, price of gold was under 1,400. And, you know, we always talk about companies and how many shares are outstanding. Well, how many dollars were outstanding? In the U.S. dollars were significantly lower, too. So there's a big catalyst for gold.
Absolutely, and gold hasn't moved up that much, really.
Yeah, it had. Yeah.
You know, we had that run up to 2063 in August of 2020. So let's switch. Get in the right lane here.
Right lane.
Yep.
Okay.
And
so do you kind of feel like we got bait and switched? I mean, I know in Canada, Canadians feel that way, or at least my friends do. You know, they drop rates down to almost zero, and then, you know, came out with extraordinary aggressive, rhetoric about how you need to go out there and spend. If you're looking to make an investment, buy a home, you could be confident. We're going to keep rates low, ultra low for a long time. Everybody levered up. House prices went up.
Right.
Yeah, so they told everybody to, you know, don't worry, we're going to keep rates super low. I mean, like people were locking in at 1.4, 1.8. Variables were even a little bit lower. Yeah, property values went up. There's a big balloon, and you know, people started speculating a lot more in the markets. And then all of a sudden, it's like they didn't even, you know, come on. So people started speculating. They trusted the monetary and fiscal policies of, you know, the Bank of Canada and the government, basically. And then they kind of threw a blind eye to not realizing that was all inflationary. Like, I mean, come on. Like, they went to school for this.
And then it was transitory, right?
Transitory, exactly, right? So I personally have a hard time believing that all of these policy makers didn't know, like, oh, if we introduce this much more dollars into the system, that's not going to cause inflation. Oh, and by the way, we're going to lock people down, and, you know, because we're scared of this big thing. I won't even say the name so the video doesn't get blocked. And ignore that there was already supply restraints. That's a good rant for me. I don't typically do that in these interviews. But that kind of seems like a bait and switch, man.
Well, it was, and I think part of the equation here that wasn't well thought out and well planned was the creation of all the money by Congress. So it was, and it started with Trump. Let's don't kid ourselves and think that he didn't stimulate this during the last year of his administration, but it became this piling on. So we've created, 30% more dollars, and we've increased the debt astronomically, and the Fed was too slow to react.
Right.
And I think that's what you're alluding to. And
they've overreacted on both ways, both sides.
well, I might have a little different view of that. So when I was a youngster or a young adult with a job and a mortgage, that would have been in the early 80s, and we saw a similar thing happen. The end of the Carter years, because we had a Fed chairman who reacted too slowly, Arthur Burns, and then capitulated.
Is that coming out of the 70s?
Yeah, so
because there was big inflation
late
there.
70s, early 80s, and we have raging inflation. When I took a mortgage on my farm, I assumed a 10-year note, and interest rate was 10%. I needed to do a secondary financing. I took a second mortgage, and it was 14.9% because inflation was raging. So Volcker came in, and he tamed it, and it led to a recession.
So Volcker comes in, tames inflation.
Yeah, but what did he do? He raised interest rates to 12-14%,
right,
and exceeded the rate of inflation, and we went in recession, but then we recovered. So in my estimation, that's what needs to be done now, but it's going to generate a recession. We've got to quit printing money. We'll see if Congress has the wherewithal to quit spending what we don't have, and the Fed has the wherewithal to start buying back all these bonds. We've seen the Japanese start to do that, but they've had 30 years of stagflation, and unless we do this, we're going to end up with stagflation just like the Japanese, in my opinion.
Yeah. So, I mean, okay, so I don't think people at this point now would disagree with this. It's pretty hard to disagree with that. It really is, I think. So how do you take positions in companies? And it doesn't seem like, let's talk about junior markets right now. It's like, where you go?
I'm not.
Yeah, you're not.
I'm not.
You're not.
So I've switched, and you alluded to this. In the late spring of 2020, when the price of gold started going up, after the dire straits when gold went to 1467 in March of 2020, and we started to come out of the pandemic, or we realized it wasn't going to kill everybody in the world, and gold started to go up, and there became this feeding frenzy in the junior resource space. All the generalist investors piled in, especially in the U.S. The price of gold went up, and from, say, June till November of 2020, we raised $3 billion for the junior resource sector. And it was a bunch of pros raising the money. And we put all our money into it, or a lot of people did, and it became this kind of feeding frenzy for pros to draw in the generalist investor.
And sell into it.
And they fell into it. And I saw it coming because I saw a similar thing in 2016. So during the run-up in the summer and fall of 2020, I was selling like a banshee. I was selling all my golds, not all of them, but most of my gold stocks, and taking phenomenal profits.
Executing on your experience.
Yeah, being a contrarian. When everybody else was buying, I was selling. And then come the fall into the winter, price of gold goes down, private placement money, 4 months, becomes free trading, and it cratered the market because there were no buyers. Everybody else was buying or had bought, and they're waiting to get out of their positions. So then that has generated a two-year plus bear market.
Plus the overarching market has not done very well, so that's probably not helped.
Right. So I'm still, I don't find anything right now in junior resource space that I particularly like. Georgia Street exit, let's go this way.
Okay, what about uranium?
Well, uranium is an interesting case. You know, the government is starting to buy uranium from U.S. companies by mandate of Congress. So the price of uranium today is $50. But it's stuck at $50 plus or minus. Been $50 plus or minus since. Well, it made a little run up to into the 60s when Sprott Physical Uranium Trust started buying, and some other companies and funds started buying uranium on spot market, but it's been stuck in neutral here for 6-9 months. So we need a better uranium price.
Yeah.
The government's buying it nominally. The best I've seen is $59.50 a pound. Bought some uranium from a uranium developer who had acquired this uranium by buying it cheaply on the spot market 2 or 3 years before.
Yeah, they're just trading it.
So uranium's got a good future. The problem right now with uranium is it's not going anywhere. And at the price of $50, nobody's going to put anything in production.
Have you heard about or followed carbon credit investing at all?
I think it's a scam.
I'm not surprised. I kind of knew you were going to say that.
And so it doesn't interest me.
Or even if you thought it was a good, sustainable business model, because it goes against probably a lot of your political views, and I already know that.
Slow down here. Let's see where we're going to go. Georgia Street exit. So
Straight?
Yep.
Okay. If you thought it was a good business model, well, if you thought it was going to be a moneymaker, would you invest in it?
That's a good question. To tell you the truth, pardon me while I watch where we're at and make sure we don't take a wrong turn.
Okay.
I'm philosophically against it. It doesn't make any sense that you can generate CO2 and then basically trade to mitigate that CO2. CO2 is still going in the atmosphere.
So now let's say...
But I'm a global warming denier, climate change denier.
Yeah. So here. I don't really want to talk about this stuff, but it's hard to not. Gender stuff, okay? We don't have to go down a rabbit hole. I'm just going to use it as an example, okay? I'm not a big fan of certain things that are happening right now in the world, but at the end of the day, people are putting their pronouns in their emails, and people are doing it now because they have to. Because if they don't have it in their email, someone else might go, oh, well, he's not such and such. You don't basically respect certain things that are going on.
Why don't you go right here?
Yeah.
Take a little drive down Denman.
Everybody's now, I shouldn't say everybody, a lot of people that I meet and that I know, I ask them, okay, as your work said you need to put this in there, and they're like, yeah, right? Okay, so why am I saying that? Let's say these big funds, the people that finance companies, BlackRocks of the world, say, well, if you don't have your carbon credits, we're not going to finance you. So I'm in line with a lot of your views on certain things. But let's say there's a sustainable business model for this based on all the weird stuff, the direction the world's headed in, which we might not like. Would you invest in it?
Absolutely not. I do not subscribe to this ESG movement.
Yeah.
There's an anti-ESG movement with some funds starting in the United States. And if companies are big on the ESG bandwagon, or too big, let me put it that way.
Yeah, you're not in.
I'm not in. Or maybe I'm out. Maybe I've sold them because I got mad at what they were doing. And I said, well, I'm not going to put up with this anymore. If someone sends me an email, and I got one sometime within the past month, all these juniors always soliciting me to cover them or take a meeting. And
you kind of sniff them out.
If I see in the signature a designation of pronouns, if I look on their website and the first page I see is ESG, I don't even respond. And I'm uncancelable. I'm like Kid Rock.
You know what I love about that?
I'm like Adam Carolla. I'm uncancelable because I don't give a flying you know what.
Yeah.
And
that's a great...
I just don't put up with it. So I am on to the anti-ESG fund bandwagon. There's a couple of guys that if you watch certain specific business and television news, watch the buses. They've got right of way everywhere here.
Okay.
I just don't do it.
So. I wish more people thought like that and didn't think so much about, well, let's be honest, this is the problem when governments and the corporate world get together and push something.
Absolutely.
Because the average person that's stuck in the middle that has to, has a job and has to go to work, they get told, well, we saw this with the good old stuff, they get told what they have to do or else.
Okay, so now we're going to head on to English Bay, so get in the right lane here.
Make a Roger.
And we'll just follow this around here.
Okay, can I go right here? Yes.
Yeah, and so now we're on the seawall. And no, I think you want to...
Oh my God.
I don't know.
We're going for a little...
We've
made a bad turn. We'll have to hit this
You're
up.
on the bike lane. Uh-oh. You
There's no cops.
threw me for a loop there, mate.
Oh, I can't even get out of it. Oh, yeah, I can.
I think you can get up out here. I think you need to be... There you go.
Okay, never happened. Never happened to me. Okay.
Okay, so now we're in English Bay. Another nice.
Okay, that was kind of funny. Okay, so what I really like about your opinion there is you have a vote. Are you dual citizen, by the way? Or
no.
You're American. Okay.
No.
You got your vote, and that's great. People need to vote. But the other way people can vote is where you allocate your capital.
Absolutely.
So I wanted to bring this point up, right? Because, I'm getting a little bit older, and you're starting to have more of a moral compass. Early on, it's like, I just want to make a bunch of money, and I get it. I totally get it. I get it. And I'm still kind of there, to be honest. But yeah, I don't want to. This is where my problem is with it. Okay, let's say the Black Rocks come out and the wars die down a little bit, or the war dies down, and a little bit more political stability, and the left kind of continues on with some control here, and I think, wow, you know what, this carbon credit thing is really going to take off, right? Well, what can happen to my kids, and this seems a little far right, but whatever, what about social credit scores, right? Well,
that's a scary thing.
Yeah, and I'm kind of thinking, if you support this carbon credit thing, you're also kind of supporting that too, right? Well, you don't have enough credits. You haven't been environmentally friendly So you got some limitations on you, right? You might.
Well, unless you're uncancelable like me. So you're in a different situation. You got kids. You got to conform a bit more than I do.
Yeah.
You know,
Yeah.
I like to make money. I don't really need to exactly have an income to survive. And so, and I'm untraceable in some ways. I don't own a cell phone. I don't know if you knew that or not.
I didn't know that.
Now the world knows it. Or our world knows it.
Yeah.
Follow the Money Group.
Yeah. Follow the Money Investor Group.
Investor Group knows it. So
are you doing a keynote here at the conference?
I am. And I'm talking about the seasonality of gold. And we've done lots of work. We got 53 years of daily gold prices. And what we do is we combine those in various time periods, but more than anything on a yearly basis. Yeah, we can go left here. And we've determined that from the 15th of December to the last week of February is the best time to make money in the price of gold. Goes up.
It's a little secret.
Uh-oh, we can't make a left here. So
Well, we've already been in the bike lane.
We'll go up to make a left here.
Okay. So you said the last week of December, or no?
From the December 15th to the third week, end of February, last week of February, gold goes up an average about 6%.
Without any
year over year.
Got
So
it.
we've seen that now. We've seen gold price move.
Okay.
And so I'm going to talk about seasonality of gold. We're going to talk about a flat period of gold from March to May. We're going to talk about summer doldrums, which presents a buying opportunity in plus or minus July, August area. So we're just going to show how that can be actionable if you want to trade gold, or if you want to buy, when you want to buy gold on dips. You don't buy gold in the middle of January.
Yeah.
Or the end of January. It's not a smart thing to do.
Do you play the option market at all? Or
No.
You're not a fan?
I've never shorted a stock in my life. No, option markets, but no. I've always found something to go long on.
Yeah.
And that's my
That's your thing?
general modus operandi. So what am I long on now? Well, I've been long on gold for a long time.
Have you had any producers that you've never sold? Or have you always kind of traded them a little bit based on maybe seasonality, whatever? Like any of the
I have some long-term holdings in mainly uranium space, but the gold juniors or the developers have always been speculations and trades for me. So no, I have no long-term holdings, except I do own a couple of precious metal funds, but those are in my IRA, and I don't really move those in and out.
Okay.
I've never really played the gold miners because they have underperformed historically for quite a long period of time, with the exception that I do own a couple of precious metal funds. And so we're going to make a left up here at Dunsmuir.
Okay. I know the street.
And so the stock market for me, with the exception of IRA and the funds I hold in that, are just trading positions.
Now, have you ever, do you like real estate? Do you invest in that?
Yeah, so before I told you what I'm long on, and I said, or as I was telling you, and I said gold, I'm also long on land, farmland in the heartland of the United States. So, and there's a reason for that, and it's part of what I'm going to talk about on Monday. The world's richest and longest lived rich families, let me put it that way, longest lived rich families have owned three things historically for centuries. And this goes at least all the way back to the Renaissance. So we're going to, once again, we're going to make a left up here. And what are those three things?
Oil, real estate.
Well, not oil, because oil was really not discovered. So we're going to make a left here. Wasn't a commodity that had any value till late 1800s. Really.
That's a good point.
So gold, farmland, and fine art.
Fine art.
Fine art. So for me, gold and farmland. So 2 out of 3 ain't bad. I don't own any fine art, so. And it's, to me, not intuitively obvious that would be something that rich people own. I mean, they own it maybe because they like it, but it retains its value, even though it's a speculative market.
Yeah, exactly. Because what somebody would be willing to pay. Right. Supply demand's a little different on that.
Whereas gold is money, we'll agree with that. You'll agree with it. Most of our viewers will agree with that. Gold is the only real money. None of these fiat currencies or kleptocurrencies. And farmland has value because it's productive. So if you have farmland, you're not going to starve.
Yeah. Yeah, you've got a ranch. I've got a hobby farm.
Oh, you've got a hobby farm. Well, my so-called ranch is nothing more than a hobby farm. So
I've only got 10 acres, but it's a little awkward, right? Because you can't scale it. But you can live off of it.
Exactly.
You can get tax exemptions.
And it's a nice rural environment, no doubt, or semi-rural at worst. And it's and so we're going to make a right here.
I know exactly where we are now.
Yeah.
Okay. Well, we're basically wrapping up here. Is there a message that you want to sign off on? I mean, you've kind of given quite a message.
Yeah. So we have a lot. You and I both have a lot of followers who speculate in junior resource space, and there's this idea right now that we are on the verge of a booming bull market. And I don't see it yet. I think it's a little too early. If it presents itself, I'll probably come back into junior resource space. I am at this point still trying to extricate we need to go left right there. Oh, okay. Sorry.
You're just saying extricate?
I'm still extricating myself from positions that I've held for quite some time. So we're right here.
I'll turn around. Okay, Mickey. Well, it's been another fantastic interview. It's unfortunate I wasn't able to see you in person for a couple of years here in Canada, anyways. But that's now gone. World is a little bit of a different place, and we're adapting to it. I love your attitude on, I could have spun around there, on you can't cancel me. I respect that. I have a lot of respect for your moral compass on investing. You don't want to allocate capital into something that you wouldn't support outside of maybe making money. I think that's a great message for people. I hope you inspire people to kind of think more about those things. And where can they follow you? I know you're active on Twitter. You got a huge following on Twitter. But where else can people?
MercenaryGeologist.com is the website. At Mercenary Geo is the Twitter feed, and we've got over 45,000 Twitter followers. We've got something 7,700 subscribers to the newsletter. I'm semi-retired, I'll be honest with you. I don't write as much as I used to, but it's free subscription, so you can go on and get my musings and my rants and ramblings and whenever they appear.
There's still value.
The bull market will come when we attract the generalist investor again. I think it's too early for that. So I'll be poised when that happens.
Thank you, sir.